Let me quickly talk to you about the basics of LLC guaranteed payments. So if you are an LLC and you are thinking about having guaranteed payments, this is the show that you really want to watch. Let me give you the overview here. So when we talk about the LLC guaranteed payments, we're talking about compensation, but also about taxation. I mean, those two elements work hand in hand, okay? So the thing is that when we talk about the LLC guaranteed payments, it's one of those things where all LLC members have to agree. So if you have a multi-member LLC, make sure that you sit everybody around the table, and everybody has to read and agree to the LLC guaranteed payments that you are going to basically sign. Okay, and what I want to say here is that LLC members can receive either profit sharing distributions or a non-salary payments known as guaranteed income. So when you have a non-salary payments, it's called guaranteed income. And so this specification is important when it comes tax time. So LLCs transfer their profit to the members who receive distributions equal to their ownership shares. For example, a member who owns a 1/3 ownership interest would receive a 1/3 of the profits. And the thing here is that profits can only be distributed when the LLC actually makes money. So if there is no profit, there is no distribution. That makes sense. This is just pure logic. Now, the LLC reports distribution income using partners' share of income, deduction, credit, etc. That's called Schedule 1, which is really given to each member. This is why I was just telling you earlier, when we talk about LLC guaranteed payments, we're also talking about taxes, okay? So those two elements. So we have profitability, compensation, but also taxation. Now, members then, when they receive the Schedule K1, they have to pay taxes on those on that income. So members then report this income on their U.S. individual income tax return, that's Form 1040, and with supplemental income and loss Schedule E attached. So anytime you are in an LLC and you receive a guaranteed payments in the year, of course you'll receive in Schedule K1 when your LLC files Form 1065. But then when you file your taxes to the IRS, you have to report your income on Schedule C, but also you have to file Schedule E, supplemental income, when you file everything. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. I want to quickly dwell on the concept of guaranteed payments. I mean, this is an important element. If you have a single member LLC or a multi-member LLC, the concept of guaranteed payments, it's important. I'll talk about guaranteed payments and also draw payments later on. So first of all, guaranteed payments. So members of an LLC may need an ongoing income, as profit sharing does not happen weekly or monthly, right? In these situations, members can receive what are called guaranteed payments, which really differ from a salary in that they do not subject the LLC to regular income and FICA taxes. So FICA, Social Security taxes. So basically, a guaranteed payment is a tax-deductible expense by the LLC that reduces the business's net profit and is reported on U.S. Partnership Income Form 1065. Okay, if you are in an S corporation, that form will be 1120S. If you're in a C corporation, that form will be 1120. But for a corporation, this Form 1065. Now, 1065 is an informational return. In other words, the company, the LLC, does not pay income taxes on that form. It just sends the info to the IRS. It's like, FYI. So for the LLC member, that is, guaranteed payments are treated as income subject to estimated income taxes and self-employment taxes. Guaranteed payments are made whether the LLC is turning a profit or not. Think about it, like, the LLC is not making money, the LLC member still has to eat, right? Has to put food on the table for his or her family. So it's one of those things where you have to really think about the liquidity of the LLC before actually setting guaranteed payments. And the LLC's operating agreement should contain information about guaranteed payments, as it's common practice for managing members to receive them. And so note that a member may receive both a salary if he or she has a job with the LLC, and guaranteed payments for his role or her role as an owner. And these payments are treated differently when it comes to taxes, okay? I mean, in terms of filing taxes, but also in terms of paying FICA taxes, Social Security taxes. Boss, I want to quickly remind you of today's topic. We are having a conversation about the basics of LLC guaranteed payments. So besides guaranteed payments, we also have draw payments. Okay, so it's one of those things where you are basically you're, let's say you're an LLC member. You want to have options. You want to keep your options open. So another way an LLC member can be paid is through a draw, which is different from a guaranteed payment. So a draw is a regularly scheduled payment, but it's meant to be a prepayment of profits. So the draw is paid out of the member's equity, and when a distribution is issued, the equity account is paid back with a profit share, and any remaining profit will be distributed. And this type of payment is taxed like a regular distribution and reported on the individual member's income tax form. Same procedure. We have Schedule K1, and then Schedule C, and then Schedule E, supplemental income. For example, a member could get a draw of let's say $1,000 per month, and if the member's yearly distribution is $13,000, 12,000 of that has already been paid as a draw, so the member would receive $1,000 as a remainder of the distribution. Okay, now guaranteed payments from an LLC to a member can give the member financial stability while waiting for the LLC to become profitable. Right? You never know in business. You know, you have ups and downs. You have ebbs and flows, and while the LLC is going through those financial and monetary ebbs and flows, the LLC member still needs to live, right? It's all about sustaining the person's lifestyle. So it's important to remember that payments do reduce any possible profit the LLC may show. And this is important. Now, one thing I want to say here is that it's always better to get professional help in terms of setting up payments for your LLC. So you can actually go to online services, or you can go to offline services. It really depends. One thing I also need to say here is that when we talk about draw payments have an accounting impact on an account called stockholders' equity. Okay, so every LLC member has a stockholder or a member's equity account. So anytime a draw is issued or a draw is made out of the LLC coffers, the LLC cash position, there has to be a corresponding accounting entry that reduces the LLC members' equity account. So this is something that it's really important to keep in mind. Let me talk to you about the approach that you really need to pay attention to. So the thing is, when we talk about guaranteed payments, it's important to understand that guaranteed payments are, again, a way to actually sustain partners, LLC partners. I would say their lifestyle. Okay, so what are guaranteed payments of partners for real? Like, how does it happen in real life? And I want to really dwell a little bit I want to dwell on the logistics of everything. So guaranteed payments, remember, when we talk about LLC and an LLC, we have managing partners and we have members, right? So because an LLC can be manager managed or member managed. So if you are a manager, or partners for that matter, guaranteed payments to partners are a payment meant to compensate a partner for services rendered or use of capital. So essentially, they are the equivalent of a salary for partners or limited liability company members. And these kinds of payments eliminate the risk of a partner making personal contribution, let's say contributions of time or property, and then never getting compensated if the partnership does not prove to be successful. It's all about risk management too, because see, the thing is, when you start an LLC, you are contributing energy, you're contributing time, you're contributing property, contributing cash, and if the LLC never pans out, you are really going to lose if you remember. But you want to really mitigate that risk. So the word guaranteed refers to the fact that these kinds of payments, known as first priority distributions, are made without regard to the partnership's profitability. In fact, such payments constitute a net loss for the partnership. They can create special and unexpected tax implications if they're not handled correctly, and this can prove complicated, especially if the IRS and the courts have found that like what really constitutes a guaranteed payments for a partner is not really the right thing to do. So just pay attention to those things. It's always better, when in doubt, to actually talk to a professional. You can actually reach out to an enrolled agent, an EA. You can reach out to a tax attorney. You can reach out to a CPA, a certified public accountant, so that you can really sort of look at everything around, because the bottom line here is that you do not want to have fines or significant tax burdens. You do not want to impose those things upon the members. So if you talk to someone who really has a clear idea about your situation, that expert will be better off when it comes to giving you the exact advice that you need. Well, I want to quickly remind you of today's topic. We are having a conversation about the basics of LLC guaranteed payments. Let me really talk about how the IRS sees guaranteed payments to partners. The thing is that guaranteed payments to partners are basically outlined in Section 707C. So if you're interested in the whole topic, you want to read publication. Basically, there is a section 707C of the Internal Revenue Code. So you have the IRC, very gigantic documents, but Section 707C, and basically this section defines the payments, like those payments, such as those made by a partnership to an individual partner for services or providing capital, and states that they are determined without regard to the income of the partnership. So whether your partnership makes money or not, those payments are guaranteed. That's a key word here, guaranteed. So when such payments meet this definition, they are considered made to a non-partner for tax purposes for both the partnership, the payer, and the recipient, the payee. And so guaranteed payments to partners are always treated as ordinary income for the partner. So the IRS is actually treating those, and this is always is treating those payments as ordinary income. So for the partnership, such payment is deductible under IRC, Internal Revenue Code, Section 162, as ordinary or non-necessary business expenses, or capitalized under IRC, Section 263. So the concept of guaranteed payments to partners may seem pretty simple, but the details can make them complicated. So payments that have not been structured properly can lead to unexpected and expensive tax issues for both the partner receiving payments and the other partners. And one thing I want to say here is that it's one of those things where you have to really analyze once again your own partnership situation. First of all, you got to ask yourself, you have an LLC, okay? Is the LLC filing as a partnership, Form 1065, or is the LLC actually filing as an S-corporation, Form 1120S, or is the partnership filing as a C-corporation, Form 1120? And this is kind of important because it will constitute the bedrock of your tax situation and of your tax planning tactics, and this will also will determine how the IRS treats those payments made to partners and non-partners. But remember, we're speaking here about ordinary income, which means that you are not being charged at the capital gains tax rate. Let me give you a few pro tips here, and I really want to dwell on the tax issues for guaranteed payment to partners. Guaranteed payments to partners actually they trigger some tax issues, and it's important to really understand. Now, with regard to a partnership, it might have an agreement that a partner is to receive, let's say, 20% of partnership income before any guaranteed payments happen, with a stipulation that they must receive, that partners must receive at least $13,000. So let me give you a hypothetical situation here. If partnership income is $100,000, the partner will get $20,000. That's 20% of $100,000, none of which will be a guaranteed payment, so it could not be deducted by the partnership, right? However, if the partnership earned $30,000, then the partner will only get $6,000 as their share, as that partner was due a minimum of $13,000. The remaining $7,000 will actually be made in the form of a guaranteed payment, and thus be eligible for a tax deduction by the partnership. So without regard to a partner, and ill-timed payments could increase their tax burden. Let me just talk here. Consider the timing issues under a scenario that has the partner using the calendar year as their fiscal year. In other words, basically starting January 1st and ending December 31st, and while the partnership's fiscal year ends on September 30th. If a partner were to receive let's say a guaranteed payment after September 30th, but before January 1st, that income will have to be included in the partner's following tax year, even though it occurred in the current year. And there are also special considerations that must be taken into account with guaranteed payments to partners in real estate, as local governments sometimes levy a tax on unincorporated businesses. For example, New York City. If you're in NYC, New York City really functions under a complicated New York State business tax code. And they have the city has its own unincorporated business tax, the UBT, that applies to partnerships as well as sole proprietorships. So while the tax burden can be significant, exempted from it is a net income from renting and ownership of the real estate. Therefore, real estate partnerships should consider the tax implications of any guaranteed payments to a partner. And so, this can include when a real estate partnership makes a guaranteed payment as a retirement payment. It is classified as ordinary income for services rendered to a partner, making it earned income. As such, it is subject to self-employment tax, which can be expensive. So this is kind of important. And however, if this payment were to be characterized as a distributive share, it will not be subject to self-employment tax, thanks to what I mentioned earlier, the exemption that I mentioned earlier. Let me give you a bonus here if you're still here. I really appreciate your attention. And what I want to say here is that, when all is said and done, what should you really think as to the purpose of guaranteed payments, but besides the sustainability of the lifestyle? It's important to understand that guaranteed payments to partners are intended to compensate them for services made or the use of capital. This is kind of important to sort of maintain and sustain the fabric of the U.S. economy, especially because you have millions of LLCs that have been created, and that are still in existence today. So those LLCs have members actually, basically invest in services, invest in their time, their energy, their capital, and there has to be a mechanism that really compensates them for that. And so guaranteed payments are therefore made without any link to the partnership's profitability, and indeed they represent a net loss to the partnership because it is money coming out no matter what. It is actually a liquidity outflow no matter what. And so when you think about guaranteed payments, I want you to really remember that they are, like, the way we analyze them, we analyze them as a salary for the partner, shielding partners from risk if the partnership is not successful. We know that an LLC is a partnership, and basically, as any business, things can go south or north depending on the market, depending on a constellation of factors. And so the thing you have to understand here is that when we talk about the LLC, you need to understand that the partnership can either take a guaranteed payments as a tax deduction or capitalize it. Okay, it's one of those things where you have to really understand. But this is actually a topic for another day, because it can be a little complicated if the partnership were to actually capitalize the guaranteed payments to the partner. But if you have any question, please let us know in the comment section. Our team will get back to you. We'll really explain things a little further for you. Thank you so much for your attention. I really appreciate it. I just want to do a quick recap here. Today, I spoke to you about the basics of an LLC guaranteed payments. I give you the overview, the approach, the pro tips, and the bonus. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.